A trader I know entered a position that immediately went in his favor. Within 20 minutes, he was up $1,400. His target was $3,000. His stop loss was tight. The setup was textbook. Everything was going according to plan. He closed it at $1,400. 2 hours later, that trade hit his original target. He would have made $3,000. Instead, he made $1,400 and spent the rest of the day sick to his stomach, watching the move happen without him. 3 days later, same setup. This time he was determined. He was going to hold to target no matter what. The trade went up, came back down near his entry, bounced, went back up. His anxiety was through the roof. He held. It finally hit target. $2,800 profit. He felt nothing. No excitement. Just relief that the torture was over. If you've ever exited a winner early and then watched helplessly as it kept running without you, you already know this pain. And you've probably told yourself it's about discipline, that you just need to stick to your plan or trust your analysis. But that's not why you're closing winners early. You're not lacking discipline. You're terrified. And the specific fear driving this behavior is so subtle, so deeply wired, that most traders never identify it. They just keep doing it, trade after trade, leaving thousands of dollars on the table. Today, we're going to name that fear. We're going to understand why it's so powerful, and then we're going to dismantle it with a system that makes holding winners feel natural instead of terrifying. Let's start by getting clear on what this fear actually is, because it's not what you think. You might assume you're exiting winners early because you're afraid of losing the profit. That's part of it, but that's surface level. The real fear is deeper and more insidious. You're not afraid of losing the profit. You're afraid of looking stupid. Let me explain. When you're in a winning trade, there's a voice in your head. It says, "This is too good to be true. This won't last. Price is going to reverse. And when it does, you're going to go from winner to loser, and you're going to feel like an idiot for not taking the profit when you had it." That voice is fear of regret. And it's one of the most powerful forces in trading psychology. Think about it. When you take a losing trade, it sucks, but at least you can explain it. The setup didn't work out, the market shifted, my stop got hit. It's a clean narrative. You took a risk, it didn't work, you move on. But when you let a winner turn into a loser, that narrative falls apart. You can't blame the setup worked. You can't blame the market gave you what you wanted. The only person to blame is yourself for not taking profit when it was right there in front of you. That's the fear. Not of losing money, of looking back and knowing you had it and gave it back. Of feeling stupid. Of proving to yourself that you don't know what you're doing. So what do? You exit early. You take the profit while it's there. And even though it's less than your target, at least you avoided the regret of watching it disappear. The irony is that by trying to avoid one form of regret, you create another. Now you're watching the trade continue without you, and you're kicking yourself for not having the conviction to hold. Meet Jennifer. She was a swing trader with a solid strategy. Her back-tested results showed an average winner of about $2,200 per trade. But her actual trading results showed an average winner of $800. She wasn't taking bad setups. She wasn't managing risk poorly. She was just closing winners the moment they showed any sign of hesitation. A small pullback, a consolidation, even just slowing momentum, and she'd exit. When I asked her why, she said, "I've been burned too many times. I've watched winners turn into losers. I'd rather take something than risk watching it disappear." And here's the thing, she was right. She had been burned multiple times. Her brain had learned that winning trades can reverse, and so it developed a protective mechanism. Close the trade before the reversal happens. The problem is, this mechanism doesn't distinguish between a trade that's about to reverse and a trade that's just taking a breath before continuing. Her brain treated all hesitation as danger, and in trying to protect her from pain, it was costing her thousands of dollars in missed profits. This is what fear does. It turns healthy caution into paranoia. It makes you see threats where there are none, and it keeps you from ever experiencing the full potential of your edge. Most trading psychology content will tell you to let your winners run and cut your losers short. You've heard it 1,000 times. It's the golden rule of trading. And it's completely useless advice. Because knowing you should let winners run doesn't address why you can't. It's like telling someone with a fear of heights to just not look down. Technically correct, practically worthless. The reason this fear is so hard to overcome is that it's rooted in loss aversion, one of the most well-documented biases in human psychology. Research shows that the pain of losing something is roughly twice as intense as the pleasure of gaining the same thing. In trading terms, this means that once you have an unrealized profit, your brain treats it as yours. It's no longer potential, it's real. And now, every tick against you isn't just a move in the market, it's a loss. Your loss. Money being taken from you. So, you exit. Not because you don't believe in the trade, but because the psychological pain of watching your profit shrink is unbearable. Let me tell you about Marcus. He was a day trader who consistently made money in the morning and gave it all back in the afternoon. When we dug into his trades, the pattern was clear. Morning trades. He'd follow his rules, hit his targets, bank profits. Clean execution. Afternoon trades. He'd enter positions, see them go in his favor, and then obsessively manage them. He'd move his stop to break even too early. He'd take partials too soon. He'd exit at the first sign of a pullback. Why the difference? In the morning, he had nothing to lose. He was starting fresh. His risk was hypothetical. But by the afternoon, he had real money in his account from the morning wins. Now every trade wasn't just about making money, it was about not giving back what he'd already made. The fear had changed. In the morning, he feared missing out. In the afternoon, he feared losing what he had. And that second fear is far more powerful. This is why traders often perform better when they're starting out or coming back from a loss. There's a strange freedom in having nothing to protect. But once you start winning, once you have something to lose, the fear creeps in, and it changes everything.
Here's what most traders don't realize. Exiting winners early doesn't just cost you the immediate missed profit, it destroys your entire edge over time. Let's do some math. Say your strategy has a 50% win rate. You risk $100 per trade, and your average winner should be $300, while your average loser is $100. That's a 3-to-1 reward-to-risk ratio. Over 100 trades, you'd have 50 winners and 50 losers. 50 winners times $300 equals $15,000. 50 losers times $100 equals $5,000. Net profit, $10,000. That's a profitable system. Not amazing, but solid. Now let's say fear makes you exit winners early. Instead of $300, you average $150 per winner. 50 winners times $150 equals $7,500. 50 losers times $100 equals $5,000. Net profit, $2,500. Same win rate, same number of trades, but you just lost $7,500 in potential profit because of fear. And here's the kicker. That $2,500 profit might not even cover your time and stress, You could be working twice as hard for the fraction of the results. But it gets worse, because exiting winners early doesn't just affect your P&L, it affects your psychology. Every time you exit early and watch the trade continue, you're training your brain that your plan can't be trusted. You're reinforcing the idea that your analysis is incomplete, that you don't really know what you're doing. Over time, this erodes your confidence. You start second-guessing your entries. You start taking smaller positions because what's the point if I'm just going to exit early anyway? You start looking for new strategies because clearly this one isn't working, even though the strategy is fine. The execution is the problem. I watched a trader named David cycle through 7 different strategies in 1 year. He'd learn a new system, backtest it, get excited, start trading it, and then abandon it within weeks. Every time, same story. The strategy would work, he'd get some winners, and then he'd start exiting early. The results would disappoint him, he'd convince himself the strategy was flawed, and he'd move on to the next one. It took him a year to realize the strategy was never the problem. His fear was. All right, let's fix this. And we're going to start not with tactics, but with a mindset shift. Because no system will work if your brain is still wired to see unrealized profit as something you're about to lose. Here's the reframe. An unrealized profit is not your money. It never was. It's the market's money, and the market is deciding whether to give it to you. I know that sounds harsh, but it's liberating. Because if the profit isn't yours yet, then watching it fluctuate isn't painful. It's just information. Price going up, the market is considering giving you money. Price pulling back, the market is reconsidering. But until you close the trade, nothing has been gained or lost. This reframe separates you emotionally from the moment-to-moment P&L. You stop treating every tick as a personal win or loss. You start seeing the trade as a process that's unfolding, and your job is to let it unfold according to your plan. Jennifer, the trader I mentioned earlier, struggled with this at first. She'd been so conditioned to see unrealized profit as real money that the reframe felt like denial. But then I asked her a question. If the profit isn't real until you close the trade, then why are you treating it as real while you're still in the trade? She didn't have an answer, and that's when it clicked. She'd been operating under 2 contradictory beliefs. She knew intellectually that unrealized profit wasn't real, but emotionally, she was treating it as if it was. And that contradiction was causing the fear. Once she committed to the reframe, truly committed, the fear started to lose its grip. She could watch her trades pull back without panicking because she wasn't watching her money disappear. She was just watching the market do what markets do: move. Here's another reframe that helps. Every winner you exit early is a trade where you didn't trust your own analysis. That stings, right? But it's true. You did the work, you identified the setup, you planned the entry, the stop, the target. You decided this trade was worth taking, and then mid-trade you decided you were wrong. Not because new information appeared, not because the setup invalidated, not because the trend shifted, but because you got scared. When you frame it that way, exiting early isn't protecting profit, it's disrespecting your own process. And if you can't trust your process, then why are you trading it? Mindset shifts are crucial, but they're not enough. You also need systems that make holding winners easier than exiting them early. So let's build those systems. System 1. The scaling exit. This is the most effective tool I've ever seen for overcoming early exit fear. Instead of trying to hold your entire position to target, you scale out in pieces. Here's how it works. Let's say you enter a trade with a $3,000 target. Divide that position into thirds. First third, exit at 1R, 1 times your risk. If you risked $100, exit $33 of your position when you're up $100 total. This locks in a guaranteed winner and takes the pressure off. Second third, exit at 2R. You're now up $200 total, you close another third. Final third, hold to your original target at 3R or trail a stop. The beauty of this system is psychological. That first exit at 1R eliminates the fear of the trade becoming a loser. You've already banked profit. The worst-case scenario is you break even or make a small profit. The fear is gone. Now you can hold the rest of the position with a clear head. And even if the trade reverses after your first exit, you still made money. You didn't let a winner become a loser. Marcus implemented this immediately. He went from exiting entire positions at the first sign of profit to scaling out in thirds. His average winner went from $800 to $1,600 in 1 month. He wasn't holding to full target yet, but he was letting 2/3 of his position run much further than before. System 2. The time-based hold. This one's simple, but powerful. Before entering any trade, decide on a minimum hold time. For day traders, maybe it's 20 minutes. For swing traders, maybe it's 24 hours. No matter what price does, you're not allowed to exit before that time. Even if you're up big, even if you're tempted, the time hasn't passed yet. No exit. This removes the constant decision-making. You're not staring at the screen asking, should I close now? What about now? You're just waiting for the clock. And in that waiting, the emotional intensity fades. You stop reacting to every move, you're just waiting for the clock. And in that waiting, the emotional intensity fades. You stop reacting to every move, you're just waiting for the clock. David used this system with a 30-minute rule. For the first 30 minutes of every trade, he wasn't allowed to touch it. No moving stops, no taking profit, nothing. The first week was torture. He watched trades go up and down and his hand hovered over the mouse a dozen times. But he held. And by the second week, something shifted. He stopped watching so intensely. He'd set the trade, set a timer, and walk away. His average hold time went from 8 minutes to 45 minutes. His average winner tripled. System 3, the profit target ladder. Instead of 1 target, set 3. A conservative target, a realistic target, and a dream scenario target. When you enter the trade, commit to holding at least until the conservative target. That's non-negotiable. Once you hit that, you can decide if you want to take profit or hold for the realistic target. This system works because it gives your fear a place to land. You're not trying to hold forever. You're just trying to hold until the first milestone. That's manageable. That's doable. And once you hit the conservative target, the fear is already diminished. You've proven to yourself that the trade can run. Now, holding for the next level feels less risky. System 4. The what would change my mind check. This is critical. Before you exit any winner, ask yourself, what about this trade has changed since I entered it? If the answer is nothing, then you're exiting out of fear, not logic, and you don't get to exit.
The only valid reasons to exit early. Your setup has invalidated. Price broke structure. Trend shifted. Volume dried up. New information appeared that changes the thesis. Your stop got hit or your target got reached. I'm scared is not a valid reason. It's up a lot is not a valid reason. It might reverse is not a valid reason. If you can't articulate a logical, trade-specific reason to exit, then you hold. This system forces you to separate emotion from execution. And over time, it trains your brain to stop listening to fear and start listening to the trade. Let me tell you how Jennifer's story ended. After months of working on her early exit problem, she entered a trade that went up fast. Within an hour, she was up $1,800. Her target was $2,500. The old Jennifer would have closed it immediately. But she didn't. She reminded herself, this isn't my money yet, it's the market's money. She checked her system, no reason to exit, setup still valid. She held. The trade pulled back. She was down to $1,200 profit. Her heart rate spiked, but she held. The trade consolidated. For 45 minutes, nothing happened. She wanted to close it so badly, but she held. Then it moved again, hit $2,500. She closed at target. She told me later that she didn't feel excited. She felt calm, like she'd finally done what she was supposed to do all along. And that calmness was the real win, not the money, the proof that she could override the fear. 3 months later, her average winner had gone from $800 to $2,100. Same strategy, same setups. She just stopped letting fear steal her profits. Here's the truth. You will never completely eliminate the fear of exiting winners early. It's hardwired. But you can build systems that make the fear irrelevant. You can reframe unrealized profit so it doesn't feel like yours to lose. You can scale out so you take pressure off. You can use time-based holds so you stop making emotional decisions. You can force yourself to articulate logical reasons before exiting. The fear will still whisper, but it won't control you. Stop trying to be fearless. Start building systems that work even when you're afraid. That's how you finally hold winners. That's how you let your edge play out. That's how you stop leaving money on the table. The market will give you what you're willing to hold. Start holding.